Good evening, welcome. You're watching NDTV Profit. I'm Harsh Saita. We're on this very special edition of Earnings Edge where Kotak Mahindra Bank has disclosed numbers. The stock itself taking a bit of a beating over the last 7 to 8 odd sessions on the back of all the RBI action that's happened, as well as with regard to senior management exit. But the numbers itself in terms of the ballpark numbers for Q4 FY24 are extremely strong. You're looking at net interest income, which has risen 13% year over year. The estimated analyst number was roughly 2 to 3% lower. So a slightly higher number definitely on that NII count, and therefore margins have come in much higher than expected. They've come in around 6 bips higher when there was expected to be a bit of a contraction where margins is concerned. So your margin number increase on a sequential basis in an otherwise tough quarter where you're seeing most banks do quite poorly on the margin front, or rather not poorly, but at least maintaining margins is a big deal. You looked at an ICICI bank which was just about able to maintain its margins and was regarded as a very strong set of numbers. We saw the stock reaction as well, and therefore this kind of a margin number is definitely a beat. You're looking at operating profit, which has gone up 18% year over year, again very, very healthy. Provisions number coming in half of what the street was penciling in at 264 odd crore, and profit after tax on a higher base seeing an 18% jump year on year. So you're seeing overall a solid set of numbers. Even the consol PAT is up 17% year over year. Mind you, Kotak Mahindra Bank on a consol basis has the securities business as well as the insurance business as well as other businesses. So your consol numbers also fairly relevant. Your NPA ratios in that, let me mark out the GNPA number. It's come down by 34 basis points on a sequential basis by 0.34%. It's come down to 1.39%. And in terms of growth, extremely strong, no concerns here, 18% YOY in terms of advances, 5% sequential. And on the deposit side of things, 24% YOY, 10% sequential. So very strong numbers. We, of course, have the media call going as we speak. But we've just cut out of that. We're trying to analyze and understand these numbers slightly better. And we have with us Aditya Shah, founder, Hercules Advisors, to join us and to speak to us about the numbers. Aditya, broadly, talk to us about how you're looking at Kotak's numbers overall. Just on the count of margins, profitability and asset quality, how would you rate the numbers?
Extremely strong numbers, as you have already pointed out. Good loan growth, good deposit growth, asset quality is in check. The slippages are at about 1,300 crores, which are a tad bit higher than last year. But then last year was a little bit of a prediction that slippages were really low. Margins have been a strong point for Kotak ever since the last 4 years, and they continue to be really very strong. So no complaints there as well. So in my opinion, these numbers are a strong set of numbers, nothing to complain about. The unsecured book is growing faster than the secured book, as we had already known. Again, no problems on the numbers. As we will discuss later, there's a lot of reputation at stake for Kotak Mahindra Bank now. And as the stock has also not given returns over the last 3 years, valuations are also now starting to get very lucrative. So overall, a good set of numbers, nothing to complain about.
Understood. Perfect. What do you make, Aditya, of the loan and the deposit growth number? Because that one has come in extremely robust. Do you believe that plenty of one-offs in that? I understand the industry itself has done very well on the deposit growth front, plus it's Q4, so seasonally strong. But what's the sense like? CASA has come off a little bit. They're focusing more on term and active money and products like that. What should, therefore, the deposit growth number mean to you or to an investor?
In my opinion, it's a very strong deposit number because the term deposit growth is at about 34%, which is exactly what I would want as a bank. Term deposit is much more stickier than the CASA deposit. Of course, CASA is at a lower rate. However, term is very sticky for the bank, and a right balance between CASA and term needs to get hit. So in my opinion, the deposit number is very strong, and in all probabilities, it will be a sticky number because of high growth on the term side of it, first point. Second point, on the loan growth side of it, we're seeing a high growth on the unsecured side of the book. Kotak is willing to take more risk, and they are getting good price for the risk that they are really taking. So I'm not really concerned on the unsecured book growing faster than the secured book. It is okay for Kotak. Kotak has the ability to contain the slippages on the unsecured side of it. So happy with the deposit number, happy with the loan growth side of it. Not concerned that the unsecured book is growing faster than the secured book.
Got it. And no worries with regard to the slippage number. No worries with regard to the unsecured slippages being slightly elevated this time around.
See, as the bank will start to go higher on the unsecured side of it, the slippages will be higher than the secured side of it. So there's nothing to complain about per se. On the flip side, if you look at it, for margin protection, the bank has to go out and do the unsecured bit of it. So I'm not too much worried of it. Anyway, Kotak's unsecured book is a very small portion of the total book. And for the business to profitably grow, it has to push the unsecured side of it. So slippages will come about, but they are nothing to complain about.
No, I already have it. Aditya, before I address the elephant in the room with regard to two issues, in fact, two elephants in the room, one with regard to leadership and the other with regard to RBI action. I want to first talk a bit about margins. What explains this 6 basis point increase in margins? Were you anticipating a margin increase? Would you therefore, or has this surprised you? Because it certainly seems to have surprised some of the analysts, and I was reading a few reports, certainly seems to have surprised them.
No, so I'm not too much surprised there because if you are growing your high cost unsecured book, which is growing for Kotak at anywhere between 30 to 40%, it is but obvious that the margins are going to improve for Kotak, and that is what has really happened. On the other side of it, the deposit growth is also very strong, so they are not moving towards the high cost deposits as well. So in my opinion, the margins are not a problem for Kotak. They have never been a problem. In fact, 5% margin is something that I am very happy with for Kotak. So this 5.28% is a plus that we are seeing today. Happy with it, a positive on the result side of it. Nothing to complain about.
Now I want to start addressing some of the other pieces. One is with regard to leadership. The other I want to address first with regard to RBI action. What do you think the impact of this is going to be on the FY25 numbers? Because, of course, the strong numbers not reflecting some of these variables. And therefore, what should change for FY25? Would loan growth come off? Will the 18% loan growth become 15%? Would the deposit growth also get impacted because no new customers to be added through the digital channel?
See, in my opinion, the number hit that Kotak is going to take is going to be very limited to, in my opinion, 5 to 10% of their profitability. That is not a big hit for a big company like Kotak to make up from their offline channels. That's not a problem. But the reputational hit that Kotak is really taking, analysts always imagined Kotak to be a very compliant bank and to have a very high pristine asset quality. If any of those two things take a hit, the valuation for the bank will start to come up. So that is a big problem for Kotak. And that's exactly what the management is also talking about, that they will take immediate action to protect their reputation, and resources will be now redirected towards the IT systems. So in my opinion, this problem will take certain amount of time. They will have to talk to the regulator and see what are the deficiencies that the regulator really found and how can they address it. It is not that the regulator is not open to taking its action back again. We've seen on Friday Bajaj Finance working with the regulator, and the restrictions there have been taken off. So in my opinion, it will take certain amount of time, but a bank like Kotak has the resources to address those problems, and it would be a 5 to 10% hit on the profitability is the first point.
Okay, Aditya, before I try and ask a few more questions on this, let me quickly pull out some points which I've listed down from the press conference that is currently at play. First off, with regard to the IT issues, they are suggesting that they're committed to building world-class infra. Currently, in terms of spend, 10% of the IT, 10% of the OPEX is actually IT spends. Roughly 13,500 crore is what the OPEX spend was FY23. Roughly 16.5 to 17,000 crore is the OPEX spend for FY24. So it's a 21% growth on a year-on-year basis. Very similar in Q4 as well, 22% year-on-year growth, and 10% of that is IT spend. That's probably best in class. Second, they are going to accelerate investments, front-end them with regard to where IT is concerned. They've suggested, Mr. Vaswani addressed this, that the top priority is to get Kotak back to business as usual. How quickly can they get it? He believes that it could take them a couple of months to address all the IT issues, go back to the regulator, and thereafter the regulator will likely take over. And then it will be up to the regulator to kind of quickly give the go-ahead with regard to all the embargoes they've put in place. With regard to existing customers, they've clarified no impact. They believe that they are focused currently on cross-sell opportunities to existing customers, and that's what they will continue to focus on. And they believe that this could actually be a positive where that is concerned. They believe that there is going to be far less impact on liability growth. The impact is largely going to be on credit card and Kotak 811. Not sure how much is the impact. They've not commented on that, but they've said liability growth may not be impacted as much. They're going to double up with regard to resolving this. They're committed to that. Now, with regard to the unsecured book, they've said that they've provided for 100% of any defaults on the unsecured book. They are making efforts with regard to collections, and the write-off is largely in line and in alignment with the industry. With regard to leadership, and that's the key piece now, Mr. Manian, they believe, has contributed immensely to building this institution. They've acknowledged that. They believe that there is plenty of bench strength though at Kotak. The new roles and responsibilities that both Mrs. Shanti Kambram as well as Mr. Ajay Vaswani are going to take over are going to be currently permanent and not temporary. And they believe that there is enough deep bench strength to replace someone like Mr. KVS Manian. More importantly, and this is probably from Federal Bank perspective, they've suggested, and Mr. Vaswani said this, that he is not aware of any offers that Mr. Manian currently has. So, not sure whether that Federal Bank offer actually is there or not. At least Mr. Vaswani not aware of that. Now, let me take it quickly across to Aditya again. Aditya, with regard to leadership, what's your take? How big is Mr. Manian to the bank? Because 3% fall on the day on which this was announced, 10,000 crore worth of market cap wiped out. Is Mr. Manian that valuable is really essentially the question, or does Kotak have enough bench strength in your view?
In my opinion, Kotak has a lot of depth in management. Of course, you cannot replace somebody like an Uday Kotak, or you cannot replace somebody like a Manian. But the point is, great institutions are built and they have to move on. HDFC Bank, there was Aditya Puri and he left, and the bank has moved on to doing various bigger things like the merger. So in my opinion, this is a short-term thing. The bank has enough depth, the bank has enough profitability that it can get new people in, and those voids can be really filled. Of course, the short-term phenomenon will be the stock will take time to recover. But in my opinion, it is not a problem. They will find enough people to replace. They have Deepak Gupta, they have Shanti Ambakaran, they have a lot of other people also in the organization who can come up to the role. So not a problem in my opinion.
Okay, let me talk about the unsecured book as well as with regard to how that is really shaping up. Do you believe that a cool-off in unsecured could also impact margins in FY25 given that credit card growth will not be there?
No, so credit card growth will be there. It is just that they will not be able to issue new credit cards. Now we have to see how long does it take Kotak Bank to resolve this embargo. In my opinion, it will take about 6 to 12 months minimum for them to resolve it. In my opinion, as I said, this 5.28% margins will not sustain. In my opinion, I have seen Kotak Mahindra Bank for a longer period of time. Somewhere between 4.5 to 5% margin is a sustainable margin band for the bank. That they can really do. You rightly said that if the credit card growth really slows down, then this margin could start to come off, which anyway was temporary in nature, so should not be a problem per se.
Understood. 22% growth is what they've clocked on number of customers. 5 crore customers now is what Kotak has. You think the fact that 811 has been embargoed, do you think there is going to be an impact with regard to number of new customers added? Do you reckon, I mean, at least I didn't find this data, but if you are aware of some of the numbers as to how much of the customers do they acquire through 811 and other tech channels?
So as much as I have read it, it was supposed to be somewhere between 3 to 5 crore customers that they are acquiring. Again, this is a problem that now they will have to spend more on acquiring customers in form of digital acquisitions. So from that perspective, as I said, margins are at the peak for Kotak and could normalize from here on, but still they will remain best in class. We don't see an HDFC, we don't see a ICICI or an Axis for that matter make those kinds of margins. So selectively, Kotak Bank does go out and give loans, and those are high margin businesses. So effectively, there could be a quarter-on-quarter slowdown, but year-on-year, the bank could really grow about. And I think that the embargo will not last more than 6 to 12 months because Kotak will view this as a major reputational damage to the company, and they will not want to sustain this for a longer period of time. So yes, short term there are problems, but longer term this is the time for the company to revisit and properly invest in their IT systems so that they can really improve.
Okay, 2.2, 2.3 times price to book value. Aditya Shah, are you buying?
In my opinion, very good long-term opportunity. We have seen over the last 1.5, 2 years, the Uday Kotak premium from the Kotak Mahindra Bank stock waning off. At point in time, the stock used to trade at about 4, 5, 6 times price to book. Now that has gone, that is waning off. Now what we need to really see is the management strategy, and we need to make sure that they will continue the slippage averse Uday Kotak, the Uday Kotak who used to worry about NPAs and not dish out loans as recklessly as other banks really do. So in my opinion, this is a good opportunity, but over a shorter period of time, the bank will take time to recover properly, and the next 6 to 12 months could be challenging for the company. But from a longer term perspective, I will start to look at the stock and dive into the stock.
Okay, and 18% loan growth, is that a concern, Aditya, to you? Slightly slower on the kind of base that they have?
No. So 18 to 20% loan growth is a very good loan growth that they are really doing. Broadly, you will also hear from the management later on the call that they also gave away some loans because they found that the pricing was not really good. So it's a balance between margins and loan growth. If a company is maintaining margins, then it is very obvious that they will need to compromise on certain amount of loans which are not very lucrative for the bank. So net, I'm not really unhappy with any of the numbers. The numbers are really good. Now the management needs to start to walk the talk and resolve those challenges so that the stock can move on from here.
Understood. And with regard to Federal Bank, KVS Manian to be appointed likely in your view, and what's the sense if he's appointed, does that warrant a re-rating in terms of price to book?
So Federal Bank is a really good bank. They have a very strong deposit franchise, very strong gold loan franchise as well. In my opinion, if Manian comes in and anyway Shyam Shekhar is really going out, it will be a positive for the bank. But Manian will be an outsider to the bank. He will take time to settle down. So in my opinion, it is a good development for Federal Bank. Will it warrant a re-rating of the stock? Time will tell. In my opinion, we need to give him 2 to 3 quarters to settle down, to envisage what strategy that he is taking, and from there on, the market will take on an opinion. But it is a very, very good development if this really happens for Federal Bank.
Okay, very good development for Federal Bank. Strong numbers from Kotak. That's the assessment. Thank you so much, Aditya Shah, for joining us in this detailed chat and giving us that perspective. Completely out of time on this one. You're watching Earnings Edge, but completely out of time from me, Harsh, as well as everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit for more. We'll have more on the